All right. It's Doc from North America. Good morning, good afternoon, and it is a good evening somewhere. And so, let's get the news out of the way. There it is. Boom. There we are. There we are. I can hear our voice. This is good. What do we got going on? Oh, we don't have everything there. Let's just do that. Let's get it all lit up. And then there is the spreadsheet. Exactly. There's the dollar index. As you can see, the dollar index is, heading down still. You can see on the beta, you got, what's that, 3 weeks, 4 weeks, 5 weeks, 6 weeks, going on a seventh week on the downside. That's the minus line right there. And you can put an arrow on it and see if it's a plus or a minus, that type of thing. And then you can see over here, the daily has been the same way. It's been, basically down about 7 days. This is the seventh day. That's live right there at the moment. Hey, Robin, what markets are you trading? That's a good question. What markets are we trading? I trade mainly the S&P. I follow so many to make sure they're accurate. And if something jumps out at me, then I, pay attention to it a little bit more than obviously something else. But overall, I'm very much involved in my head in dealing with the S&P 500. That's the world index in many ways. There's no doubt the Dow Jones Industrial Average is the grand lady of them all, and it has a different nature to it. It's a divisor index versus a cap weighted index. And I enjoy using a divisor index much more. I find a lot of insight into it. But overall, kind of focusing on that. And if there's opportunities in other products, I go take a look at them and put a position on them. And that's how we use the charts here. We look at the weekly and the daily, and then bull spreads and bear spreads, and reduces the risk factor, and it gives you an opportunity to adjust when things change. It's and that's an always nice thing too. Is just cutting down one commission side. That's always nice. To go be long, and then all of a sudden you just have to do one commission to be short. I like that. So that's where my head is at. All right. What else do we've got going on today? What can we say about any of this at this point? I guess the biggie, I guess you could say, in many ways, is the. I've been surprised about the commodities. The temperatures, the society itself. Things are changing, and for the season, and I'm really surprised that they're not buying more of the commodities. We've been in weekly sells in a lot of these products. We are starting to flirt with, I think, let's see, we show you let's show you on the beta, corn and soybeans. And they've been updated too. If I can find them on here. Where are you? There it is. There's soybeans. And I've been kind of surprised about the action. We're starting to flirt. You can see it's starting to get into a daily buy here for the second day. The weekly is trying to turn up. It's been in a weekly sell since up in here in the, I guess it's the 1075 area, something like that. And I'm really surprised that, went into a weekly sell down in here. Yes, it was right here too, up in the 1113 area. And then we had a nice little bounce. People probably thought, oh, we're going to turn up. And it didn't. It found a way to roll back over again in here in the 1070-ish area. And, here we are. We've traded as low as, was that 955. So it dropped $1.25 there. And then before that, we don't go back as far on this chart, but we can go back further. And we were really surprised that off the $12 area it fell down. And that was a little surprising to me. I really thought that the grains would hold their prices more, and they didn't. All of them joined in. Even cattle now is dropping, I guess, because of the price of food. To feed the animals is dropping lower. And then when we go and look at corn, I was really surprised that we even broke into under the $4 area. that really surprised me also. That's another surprise I've seen over these last couple months that really was like, wow, that's a little hard to believe, because I keep on hearing how the world is starving. So if the world's starving, how come they're not buying this stuff, you know? You can see here, same situation about 12 weeks ago. It was trading in the 411, 405 area, 402, 409 close. And we've gotten down to, was it 390? Now this is the December contract. The September contract has gotten even deeper down. It's, let's see if we can show it to you. Let's put it up on the other machine. The September contract's gotten down into the 370s. And that was, again, $3.70 a bushel. I was really surprised to see that drop from the $5 area, because that one even took more of a punishment, the front month contract. Whereas the back month, obviously, they're more concerned. And you can see, oh, and here you go. Now on the other chart, you can see it here. Let's put it up on there. Where isn't that? Right there. You can see it came down from the $5 area in December. The December contract, that is. Back in, where is that? That is back in June, no less. So it drove it down from almost the $5 area down below the $4 area. Really surprising, you know, to see the world, the prices come down like that. Same situation. Let's scrunch that up a little bit. Same situation. We were up near the $5 area in, was that June also? Yeah, that's June also. It was like 480, 470. And it's found itself all the way down 3 days ago, down to 467. I'm sorry, 367. So out of all the things that are trading in the world, that really surprised me. You know, it didn't surprise me to watch the, what was it, the techs. That didn't surprise me any. I wasn't, I was expecting to see a pullback in the techs. They've had 200% and 300% gains, not like a 20% gain or a 50% gain. They had like 200% and 300% gains in some of the stock, in some of these tech stocks, especially in the chip area and so forth. So that didn't surprise me to see a little correction going on, say like in, let's put one of those up there. Open Sesame. Let's go with, yeah, that looks good. That didn't surprise me any. See the little back off on a lot of the products. And it's, there was a nice rotation going on too. I mean, it looked like they were preparing for the coronation of Mr. Trump as the next president. And then they coup d'etat. We had a coup d'etat. We've had a couple coup d'etats in the United States of late. And then they just threw Mr. Biden out the door after he won the primaries. They didn't like how he was polling. They got rid of him. Matter of fact, they put him on TV last night for the Democrat convention. The poor guy wasn't on until like 11:30, almost midnight. It's like, it's like as if he's not even the sitting president anymore. They just basically threw him in the trash can. You can see here, this is Tesla. Tesla came down off of, the 270-ish area, you can say, and got down to the 180. It should have done that. I mean, when you go back and look where it came from at the beginning of the year, all right, there is the close of 24. It was up at 270, and then they slammed it all the way down to 146 in April. And then the thing roared back up to, where it started the year from. Maybe, got a little bit higher, vacillated in there just like this area here. And then, they sold it down, off of the tech rollover, I guess you could call it. And now it's bouncing back up again in the 200s. So that made sense to me that they expect to see something like that, just like NVDA. Let's put NVDA in there. There's NVDA. NVDA is like the giant. Yeah, I mean, the thing started off at the beginning of the year. It started off at let's see. Remember, they split it 10-1. So let's go back like this. There's 10-1. So they did a split 10-1. So basically, the stock was trading in the $40 area. I guess it's like the $45, $50 area, like that. There's a 47 low that day in January, at the beginning of January January 1st or 2nd or 3rd or something like that. And then so you're looking at $43, and you can see here the product goes to $140. So I mean, it triples in price, even greater than triples, like 330% or something like that. So is it hard to believe when you have a 330% gain, a gain, that you wouldn't take it down a little bit? Sure, they took it down into like a 200% gain or something like that. I guess it was 130% gain. So after a 325% gain, so they take a big chunk out of it, profit wise, and look where it's at now. So it's almost back up to that point. So, and I think what happened was, like I said, the coronation of, when they saw how bad Joe Biden is, they couldn't hide it anymore. A week before, Biden is the most ingenious president we've ever had. We talk to him every day. He is brilliant. And then he debates Mr. Trump and gets thrown out the door in a matter of hours. They just literally throw him out the door. He has to resign. He must go. He's lost it. He doesn't have the ability. I mean, they were telling us for 3.5 years he was brilliant, up until a week and a half, up to the debate. And even in the debate, I talked to him yesterday. He's a brilliant man. He knows everything that's going on. He never misses a beat. And then all of a sudden, a day after the debate, the Democrat Party coup d'etats him and says, "You will resign, or we will throw you out of office." And he's gone. He's not running for president. Gone. And they put him on at midnight last night, basically. Let's see. The first day of the convention, they put him on around midnight. They couldn't even bring him in at 7 o'clock or 8 o'clock where the national media could see him. They put him on like when everybody goes to bed. Only California could see him, basically. California and Colorado sees him at 8 o'clock, 9 o'clock. Amazing. So that is, let's see, what is that? What am I looking at here? I'm trying to put something up there, and I'm trying to figure out what am I going for on that chart. Forget it. I'll just go like that. So that's really the action we're seeing in the marketplace. We're seeing, I know what I was going for. It was the Russell 2000. Let's put that up on there. So in other words, they started buying the Russell 2000, and the Russell 2000 is a low cap index, and so companies in there could be $500 million, things like that. $1 billion. I think the biggest level they might be is $3 billion companies in there. And so Microsoft was in there at one time, Intel was in there at one time, Apple Computer was in there at one time. They were all small cap companies compared to what they are today, $1 trillion cap companies. And so, until they threw Joe Biden out the door, right here, they threw him out the door here, and he finally had to resign and so forth. And you can see they drove the market down below. That's the Russell 2000, and they're starting to come back. There is a response. Mr. Trump looks like he will win the election, and it looks like he'll win it big. But they're working really hard to make Miss Harris look like she is now that brilliant person that everybody said was a fool. For 3.5 years, they said she's incompetent, she can't do this, she can't do that. Now all of a sudden, she's brilliant. She's brilliant. Smartest thinker out there, got everything going on, and she's put out her socialist agenda. Some are calling it a communist agenda, but she's got the Soviet Union in her heart, obviously, and she's, her father was a communist, and he was a professor out at Berkeley, I think it is, and so they're, the Democrat Party is on that socialist side, and some of them are communists, and most of the average Democrat now is pretty much a Republican at this point. And that's how that all works. Okay, so there we are. And that's why I did expect the techs to come down, but I did not expect the grains to come down. That was a surprise there. That was a surprise this year so far. All right, a lot of people thought that Joe Biden would be removed on my side of the political spectrum. We knew that he had his issues, let's say. and we didn't really think the Democrats would put up with him. And they finally did, and they put him in a debate with Mr. Trump. And, they gave him advice and said, you should debate Mr. Trump when he says to debate. And he did, and he fell apart enormously to the point where the National Democrats threw him out of office, basically. I mean, we don't even see him in the White House. We have no idea what the hell he's doing half the time. So the country's being run by the Democrat Party more. What else can we say? I guess that's about it. That's the surprises, and that answers Robin's question about what I was thinking about when it comes to trading and so forth. All right, now, and I don't see anybody asking any particular product, so we'll just keep on marching along. So let's go take a look at the euro, and that's the great experiment. We'll get to that. I guess that it's fight night in the parliament there. They have fight night now. If you start to speak and they don't like what you're saying, you can rush up to the to the speaker and punch them. Fight night in Turkey. It's in the parliament now. MMA. What's that? What's that? The martial arts one we have around here. The professional one is like MMA or something like that. Martial arts. So that's yeah, really. It is funny. All right, anyway, poor Turkey. Oh, my goodness gracious. It's gobble gobble. So here it is. There's the euro, and we are launched ourselves up. We've been in a weekly buy for 5 weeks. I've been saying over and over, don't trust the sell because it won't push the weekly down. Whereas, a sell can lead to a weekly sell. It can. But in this case here, it just refused to. Not even the fast algorithm would go underneath. We've talked about that. And sure enough, it started to dig its heels in. And we got into that daily buy here, and it stayed in there for a nice little pop. And then we've gone into another one, which is even a bigger pop. And they're obviously assuming that Mr. Trump is going to win and the interest rates are going to come down, because interest rates are transitory and inflation is not transitory. Just a little reminder there to our cowboy chairman of the Federal Reserve, who's out there in Wyoming, rustling cattle. He's herding cattle right now and so forth. Mr. Powell will be in Wyoming, cattle country, talking about the markets on Thursday and Friday of this week. So brace yourself for whatever Mr. Powell is going to say. Maybe he'll sing "Happy Trails to You." Maybe he'll sing that to you. Now here's the cable, and the cable has woken up, and they didn't have the revolution that everybody thought they were going to have. They just locked up a couple dads and moms, and the public is basically telling them, no, we kind of like the idea of free speech. We kind of like the idea of people not killing other people on the streets as a hobby. And so that revolution that everybody was trying to tell us was going to happen seems to have been thrown away. And they locked up some moms and dads about complaining about education. And that's pretty much, it's done and over with. And now the political left that's running the country now realizes that they're not going to be able to support the criminals anymore. They did their best. Like I said, they locked up some moms and dads complaining about the education problems and the crime, but that's not going to last long. And you can see here, we slid into the weekly buy right at the bottom of it all. And you can see the fast, it drifted into it. And the daily kept us safe all the way down. It topped out here, right there, as we were in the weekly buy, and you could not be long. If you wanted to be long, it had to be in like a bull spread, something that you had a limited risk at. You just could not be long the cable itself. And sure enough, we went into the buy basically almost right at the bottom right there. And we started turning up last week, and the fast went into the buy. And now you can see this week, you can see on the cable, the slow is getting ready to go into the buy. It's looking very firm. And when we look at the way it's trading against the Euro GBP spread, you see it went into that weekly buy, gave us the warning, And the daily did fine also. And then, I don't know why it's over there, red, but it went into the sell there. And then we got into a buy. Oh, yeah, we got to throw a buy in there from right there. There's a, went into the sell again right there. So we can go like that. Oop, move it over one. And then we went, one day it went into the buy. How about that? One day it found a way into the buy. Somewhere along the line, they realized that the parliament wasn't going to be able to keep mommies and daddies locked up for complaining about crime and education. So one day, and you can see here, it's in the sell now, and it's telling us that the cable is starting to outperform again the euro, and we'll see. You can see fast has drifted underneath the zero line there. And you'll see how well this goes along. The manifold and everything's looking pretty protecting at the moment. You can see this manifold right here. The fast is broken through it. We'll see by the end of the week if the slow has, the histogram drops below it. See the green line if it comes down and attacks it, like here when when it's topping out. The thing, basically, this is like a Bollinger Band concept. This is standard deviation of our mathematics, though, not of the indicator. It's of our mathematics. So that's even more, because that's why on some charts we have a Bollinger Band, because when you look at the Bollinger Band on the product versus our Bollinger Band, I guess you could, what is it? Bollinger Band is a standard deviation. And so when you see the standard deviation developed by John Bollinger on the chart itself, you can see ours is ahead of the curve. In other words, ours is ahead of looking at it, because it's measuring our math, not the product itself. And so it makes it even faster, makes it more accurate, and before you know it, you're like, wow, okay. Just like here, you see where the green line goes up through it, and then it breaks down right in here, and what happens? It goes down in value. See, it's like magic. You can see here where it tries to jump underneath the extreme, like a standard deviation would, and it starts to turn up, and you got a pop, and then boom, one day it's right back underneath, and it's still not moved back up. It's underneath, and it's gliding down, and that is the standard deviation. That's the math and the concept of it all. Ta-da! All right, from there we go over into the currencies. We take a look at the Swiss, the inflation fighters, and you can see here it is starting to break down. That's nice. And we went into the sell 2 days back. I guess this is a third day now. Is that it right there? Where did it go into the sell? I think it went into the sell there. So if we widen this, is it 1 day back or 2 days back? 1 day back. There we go. You can see there. At the same time, this product has been in a weekly sell now for, where is it on the spreadsheet? Let's go to the spreadsheet. Oh, mouse, show us where you are. There it is right there. There is the Swiss. And we're looking at 12 full weeks now in a sell. 12 full weeks and 1 day in a sell. So this product, they've battled with the inflation and won. We need, as I say all the time, it should be the headline of today's webinar, literally in some way. And that is that we need, what do we need? We need an inflation fighter chairman. Not, maybe another Swiss banker. Maybe they need to bring a Swiss banker or two, since the Federal Reserve is supposedly so global. Why don't they put some Swiss bankers on that thing? Because they seem to be making the right decisions. So, they realized that things were going wrong, and what's a good example of it is that there's a hamburger company in the United States called McDonald's, and they're the largest hamburger company in the United States. They make fast food. And they have an index because they have so many McDonald's around the world in every major capital that they take a look at what they call the Big Mac. That's a big hamburger with lettuce and tomato and so forth. Big Mac. And so the Big Mac indicator has shown that the highest inflation was, would you believe, it was in Switzerland. So they really caught the sensitivity of it. They rationalized back in December of last year that there was a problem, and they straightened it out. And that's really impressive. I mean, look at this currency. I mean, matter of fact, Turkey should hire some Swiss bankers. That's what's really needed there, because that poor product is like getting its teeth kicked in and day out. The poor population is getting beat up left and right. And now they've turned fight night into the parliament. Whatever experiment former prime minister, now president, has come up with is truly it's baffling. I'm baffled by it all. You know, go from an industrial nation to a third world country. What's that all about? I mean, normally when you lower your currency in value, you're trying to get foreign investment in there. But the foreign investment doesn't seem to be coming. And, for the general population, that is, who knows? Maybe they're investing in Aragon. Maybe Aragon has some projects that are worth investing in, and we just don't know about them. But all I can say is that currency has gone from 1 under his guidance all the way up to 37 now. And we're at another record high today. And now they have fight night, to entertain the population. They have fight night in the parliament. So it's like, whoa, where are their heads at, What is their malfunction? Now, here's a good example. Someone asked us to put the Bollinger Bands on the Swiss somewheres over the last year or two, and we did. We put them on there, and you can see it. Matter of fact, let's see if we can tighten it up. Let's give it a spin even. And there's a good example. There's a spin. All right, here's a good example of the math. Now, this is a daily here, and obviously this is a daily here. Okay? So this gives you a good example, and you can see how buried the Bollinger Band is heading down. At the same time, you can see it's kind of bottomed out, and you can see how our math, the green line, jumped through the band, telling you to be long or you be wrong. And sure enough, see, it went up. So you be long dollars in that case there. So this is a good example of how the Bollinger Band is behind the curve when it comes to our math, and we are ahead of the curve. Good example there. Same thing over here. You see all the way back in March of last year, or this year, to be exact. You see our green line going from the oversold in here, launching itself up, and look at that. The markets the product goes roaring up, and it's a good clear signal. And when you're sitting on that zero line and you're seeing our green line piercing through, you know that the next challenge is the blue line. And sure enough, it was. And then when it breaks down here, it goes sideways and starts to move down. And it moves down in its own way. Again, it's a standard deviation, so it's just showing you that type of action. When you put all our math together, ahead of the curve. Definitely ahead of the curve. All right, from there, we'll go over to the yen. I think that the Federal Reserve helped them out to unwind that incredibly large, what do they call it, the swap position. For years, they've been printing money, selling it, putting it out into the market and taking the money in. And it turned into a swap position. So it was like over $20 trillion in swaps. And so they've reduced it down to about $3 trillion now. So they're back in the saddle again. Less pressure, a little more expense and interest, but maybe more investment will come into the country. At one point, or where we're at now, I haven't seen the numbers of late. I haven't even looked. I don't pay attention. When it got beyond 50% that the Bank of Japan owned the top 50 companies more than 50% than the population, in other words, in the open market, the country was invested. It was like a command and control economy. Your classic, I don't know, how do you describe it? I don't even. It's a whole new way of looking at fascism and socialism and communism. Let's put it that way. Japanesism. When you have your central bank owning more than 50, owning 50%. It's bad enough our central bank owns the bankrupt companies. At least that is understandable. That's the idea of the Federal Reserve, to prop up weak or bad economic situation. okay, and protect the population's investments. They've gone overboard about it, of course, and I don't like what I see with quantitative easing. But the idea worked fine for 2 years. It's just now we're in the, where are we now? We're in the 15th year of it, and it's not good. Because you had goofy things like zero interest rates, minus interest rates. You had all kinds of strange things. That's because the Democrats bankrupt the planet back in 2000. They started bankrupting the planet in 2005. George Bush warned them. He did videos on it, and you can't find those videos anymore. They're gone. They've made sure that they're not seen. We saw Democrat politicians crying on TV how they didn't mean to hurt the world and the economy and everybody. They thought they were helping the world and the economy. Barney Frank, just like Saint Germain and all these others, these Congress people that buried the economy and our world. And now the worst part of all is that the only real strong central bank at this point is the U.S. central bank. Because the rest of the world is pretty much just, kind of moping along because they don't use supply side. You see supply side economics in the old Eastern European countries like Poland and Hungary and Slovakia and Czech Republic and Latvia. You're seeing more and more supply side economics. Reaganomics, Trumponomics, where people grow and the economy does better and people do better and so forth. But the socialists, still have lots of sway and control in Europe. So you can see the ridiculousness of it all. Poland, which is about the 5th largest country or 6th largest country in Europe, something like that, could be as much as the 7th largest company, is the 2nd largest industrial nation now. It's knocked France off as number 2. So it's Germany, then Poland, and then France. Now, France is the 2nd largest European country. Germany's the 1st. So, why is Poland the 7th basically dominating the industrial base now over there? It's because they're doing supply-side economics the way the United States is. I mean, United States is 350 million people, and we are 10 times stronger than the next 10 nations together. So, supply-side economics works even with our socialists. Now, see, our socialists are very happy over here because they have money they can take from everybody else to do socialism. But sooner or later, as Margaret Thatcher said, you run out of other people's money, you have problems. Right now, our socialists are on the edges of that. They're realizing that they're running out of everybody else's money, and they only they barely made it into the government last time, and I don't believe they're going to make it this time. Mrs. Harris will go down because people don't want socialism, and they don't want communism. They want supply-side capitalism that's benevolent and prosperous for more than anybody else, anything ever done on planet Earth. So, all right, and that is the yen. And like I said, I think the yen, when the yen is going down, it's gaining against the dollar. I think the Federal Reserve has helped them unwind that really giant burden of $20 trillion. And that is, a good thing for, Japan, without a doubt. All right, now we go and look at the Great Experiment. This is, it's literally a textbook. It is a textbook of what not to do when you run a country. This is it right there. But, I do find the fight nights kind of fascinating they do up in Parliament now. At least, that's what they should do. Force the politicians to fight each other. Because I'll tell you, they're not exactly doing the population any favors by watching their currency go from 1 to 37. So, I mean, maybe they can get rid of, beat some of the baddies out of there, punch them out, get rid of them, bring in some supply-siders, get rid of the socialists, You can see it's been in a weekly buy since the 33 area, and now we keep on dancing and marching up into the 37 area. I forget what projection I gave before, but I really don't want to see it come. But unfortunately, it seems to be coming, and that's the problem. Our math keeps on telling us that it's going higher, and that's a sad thing for the population there. That's That's not hyperinflation. That's supersonic inflation. That's what that is. Hyperinflation is like, what we saw happen in the States here. Boom, pushed it up from, 1.5 to 10. But what we're looking at in Turkey is we're looking at supersonic inflation. It's gone from 1 to 37. That's like a supersonic rocket. It's like 7 times the speed of sound. It's blasting off. Okay, from there, where do we go from there? We'll go over to the South African Rand, which every time I see it now makes me feel a little warmer. We're finally moving away from the Robert Mugabe. No, I'm sorry, that's not. That's it. What was the other fellow? The one that was with the ANC. Nelson Mandela. We're moving away from the Nelson Mandela economy, and that's good, because that's been just a destruction of the South African economy. And with this thing gaining, now when this goes down, it's gaining against the dollar. And what's interesting usually is that usually pushes up gold. Let's show you gold on the beta. We'll do that so that we can bounce back and forth to the 2. And so gold this morning, last I saw it, it was looking fine as kind. And it's a little main talk there. And there it is right there. You see it's at another all-time high. I guess that's the inflation scare thing that goes on. And that is definitely a pressure point. There's no doubt about that. I guess what can you say is that it's good that we're seeing. Let's see. That we're seeing the South African Rand drop. What's not good, obviously, is that gold is going to all-time highs, which usually means there's an issue there. There's a real issue. And so, that is a problem. That is a problem, and there's no stopping it. And that's the only way we can really look at it at this point. Is it won't change until policies change, and we're moving away from Nelson Mandela's policies now. The ANC lost power this last election for the first time since he took control. And it's now a shared government, and that's the situation now. Unfortunately, the ANC was a combination communist socialist financial policy, and so it kind of hurt the country and beat it down. So it's people live and learn. It's unfortunate. That's what they call it, free will is all about in the end. That's what free will is all about. And so that's where we stand as we watch this whole adventure go on, And that's what it does. It goes on and on and on. And then from there, I don't see any questions, so we'll move over to, what we should do? Today's title I already got the title. I got the title in my head. I can hear it now. I can hear that title in my head. And that is Free Markets, Free People. And we've done that one many times before. Or we've talked about it all the time around here. But that is, to me, the best thing of all. When you allow the population to run the markets, not like Aragon running the markets in Turkey, you see what happens. Currency goes. Same thing happened in the Soviet Union. Same thing goes on in the Russian Federation now, where the free markets are far and in between. And so without free markets, we end up with really bad economic policies. Because see, free markets open the doorway for people to say, "Hey, this doesn't work," and then then they change it. But whereas someone like Turkey, he was prime minister, now he's president, and the currency just gets worse and worse and worse. It's been under his tutelage. It has turned into a third world country when it comes to economics. That's sad. Free markets, free people. And when government runs your markets, you in the end pay for it. It hurts you. It definitely hurts you. All right. Where do we go from there? We'll take a look at silver. Let's put the silver up on the beta. Silver and beta. Beta and silver. Where are you? I didn't move silver, did I? There it is right there. And silver's doing that same thing. We're seeing some strength in it. We see days in buying. You can see it's trying to climb into the weekly buy. What we see on the spreadsheet, whereas we see ding, 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 ding on the spreadsheet, you can see there gold is 7 weeks in a buy, 2 days in a buy. And silver has been like 5 weeks in a sell, and that's why it was going down, of course, because the math was telling us that it was going to go down. And now we're 2 days in a daily buy. And starting the week off, look at that. Yeah, we're moving into the, here's Tuesday, and here we are up above the zero line. For copper, interesting. Let's put the copper up on the screen. And you can see here, that's that example of the South African rand. When it's gaining against the dollar, going down, the metals like to go up in value. And so then from there, we go over to right there, copper. And there's copper. You can see it's getting close, really close to the edge, right to the edge there. You can see it's been in a daily buy for, is that 4, 5, 6 days now? And there it is right there, copper. On the spreadsheet. Yep. And then platinum. Platinum's usually the leader here when it comes to the metals, but it's gotten even worse now. I think it's the most dangerous short in the world. Look at that. It's been 6 weeks in a sell. We don't even pay attention to the daily on this. Right there, there's 5 weeks coming into last week. We're on a 6 week, but it's getting very close, as you can see right there. It's trying to lift up more. You see that? And, it's trying to push a little bit. You can see the daily has been in a buy for 3 days. This is the 4th day. But it's trying to roll over on us. Overall, it's been interesting. Buy up to there, but we're in a weekly sell. Like I said, this is the most dangerous short out there. For decades upon decades, we've seen platinum trade over the price of gold. So if gold is $2,500 an ounce, you would assume that, platinum would be at least around $2,450. Here we are at $965. So, when Mr. Trump was in office, it was only like $200 and $100 and $300 and bouncing back and forth. But these guys have pounded this thing into the soil, just crushed it. I think personally, because you see the problem with silver trying to hold over the $30 area, we can see that the all-time high in silver is like was it $54, $55, and here we are at all-time highs in in gold at 2,500 plus, and we're not anywhere near $55. We're not even over $30, so it's still 50% off its all-time high, and you can see platinum. Platinum is I don't know, what is it? 200% below its all-time high, something like that. I think platinum had seen $2,000 an ounce at one time. So, we're looking at that thing had a big premium over gold. Now it's discounted by 200%. It's like, whoa, you do not want to be playing with a short in platinum, because what if they wake up and things change and the Federal Reserve is not able to do the hedge? I think what they're doing is the Federal Reserve is long gold but holds it down, and it shorts platinum and silver to try to hold it down more. and I think they to keep it short. And I've said this dozens upon dozens upon dozens of times here on the webinars over the decade, and that is that I am amazed that gold is not 5,000 an ounce. I am. If someone had told me about quantitative easing in 2007 or 2006, and it happened at the end of 2008 as Mr. Obama got elected, the last 2 weeks of the election, all of a sudden the markets collapsed and they started doing quantitative easing as he won the election. If you would have told me that gold was going to be trading at $250 an ounce when the world has gone bankrupt, Lloyd's of London is gone, Merrill Lynch is gone, Bear Stearns is gone, Barclays Bank is gone. They're all owned by the Exchequer or the Federal Reserve or something of that nature. Bank of Scotland, all of them. Citibank in New York, Citibank trades at 92% below its all-time high. Not 9%, 92%. Same thing with Deutsche Bank. It's trading about 75% off its all-time high. Whereas you see like JP Morgan Chase, no problem, trading at, 3% below its all-time high or 5%. They've been to all-time highs no more than like 3 months ago. Whereas the last time Citibank saw an all-time high was somewheres out probably in 2005 or 2006, something like that. It's been almost 20 years since it saw an all-time high. And so if you would have told me that the Federal Reserve and all the world banks and all these major corporations went out of business and are now owned, especially Lloyd's of London, that's the one that blows my mind more than anything else. But Merrill Lynch, they're salesmen anyway, so I never really expected too much out of them. But Lloyd's of London was a combination of insurance and exchange traded insurance policies. So for them to go out of business is like watching an exchange go out of business. And that was like a big surprise to me. And I would have thought if those things went out of business, then obviously I think they used to relate to Lloyd's of London as Rock of Gibraltar. Like it never will go anywhere. It will always be here. And sure enough it is, but it's owned now by the population, not by the members. It's gone. It's gone. And so, I would have thought gold would have been $5,000 to $10,000 an ounce. Literally, anywhere's in between there. When you see the destruction of assets on the planet, you would have thought that gold would have been higher. Well, unfortunately for the Federal Reserve and so forth, the way it works is that all these retirement funds, all these hedge funds, all these mutual funds have incorporation. They're incorporated, and with an incorporation comes a financial manifesto. In other words, when you incorporate, you tell your investors what you're going to do, and you tell them about 85-90% of what you're going to do, and then there's always this 5 or 10% that says, and we will use our proprietary, ideas. Combined with all the rules that they create. So you basically know when funds are buying and selling. And so one of them is that one of the big things up until 10 years ago was always put a gold factor in there. In other words, if gold goes through X, or if inflation goes through X, we will sell stock and we will move into, TIPS, things like that. TIPS is Treasury inflation products, where they don't give you an interest rate per se, just an interest rate over, they'll give you a percentage over inflation. That's why they call them TIPS. So, the whole world is now seeing that the inflation battle is going on, and it's hurt so many, and so like Turkey and so forth, and you see the damage that inflation does. It's doing it to the United States too because of our socialist policies. So at this point, basically, that's where we stand. At this point, that's exactly where we stand. And There's not much to be said beyond that, really. And at the same time, it keeps on marching along. That's really where we're at. It marches along, and it's not going to stop. So, anyhow, this is Doc from North America. We're pretty much. We can take a quick look at some of the other products that we normally don't. We always do look at. There's crude oil right there. You can see crude trying to bounce a little bit today. It was down for a while, down towards the 72 area. It's in a daily sell. It's flirting with a weekly buy, which is curious. And then you can see here heating oil, which basically is used for airplanes and diesel trucks and cars and heating homes here in the United States. And you can see that's been dropping off. It's down to $2.27, and it was up around the $3 area. And I guess it's anticipating many more things like, Mr. Trump winning. A lot of these things are. Even with Iran threatening to do this, that, and the other thing to a third of the world. What else we got in there? Let's go take a look at... I'm sure we got something else here we can look at. Let's see. What else is it? From there, we go over to natural gas. See what natural gas is doing right there. Natural gas has been lifting up a little bit, but it should, because it was under $2. This heats a lot of homes and so forth in Europe too, and so it's trying to get some energy. We've been in a weekly sell. You can see it on the spreadsheet. We've been on that sell now on natural gas for 9 weeks now, and that's why it's come down from the $3 area down to the 2, or vice versa. Our system told us it was having pressure on it, and it did, and it went down. And so that's pretty much the action there. Let's see, what else is there? Okay, let's do this. Let's take a look at some of the stocks real quick. We saw Nevada, so let's take a look at Apple. There's Apple, lifting up, trying to come back from its sell-off from the 235 area, where it fell down below 200. Now it's back up to 225. So, yeah, they're adjusting here and they're adjusting there. You see Netflix showing lots of life. People want entertainment. You can see Google here. There's Google trying to lift up, but it's still in a weekly sell. Amazon, is Amazon in a weekly buy yet? Yeah, see, it's flirting with the weekly buy this week, right there. And Apple went into the weekly buy 2 weeks ago, and sure enough, it's higher than it was then. Let's see, what else is there? Tesla, see the same thing. It's trying to get up into the weekly buy, but so far nothing major. And that is the Doc from North America. We will catch you tomorrow, same time, same channel. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Have a safe and smart day. Ta-ta for now.